Let's get to Michelle Meyer. She's an economist at Barclays Capital with a focus on housing. Joining me now from Barclays Trading Floor. Michelle, good to have you back on the program.
Nice to be here, Betty. Okay,
so I would term this report, or the series of reports we've gotten, as kind of mixed on the housing markets. What do you think?
I'd say that's probably about right. I'm somewhat encouraged by the recent data. I think that we are seeing an underlying improvement in home construction. Today's housing starts number was up, starts now up about 20% on the year. And building permits, although they did fall in January, they were up the prior 2 months. So we're still seeing an environment where builders are slowly starting to increase construction amid slightly better home sales.
But where are they starting to restart construction exactly?
Well, if you remember, inventories are very lean right now. Builders slashed construction very aggressively over the past several years, and they brought inventories of new homes down to the lowest level since 1971. So any increase in home sales will warrant a gain in housing construction to meet that increase in demand. And of course, as you said, there's a regional difference as well. So there's certain markets that don't have a big glut of homes for sale, and there is a need to increase construction in those areas.
But also, I'm thinking about the types of housing that they're now building. Does it matter that they're building more or less single-family homes, multi-unit buildings, or what? Does that matter?
For the economic outlook, not really, because either way, you're increasing construction, you're creating a need for more building materials, you're hiring workers to do that construction. So it will be stimulative to the economy, regardless if they're building a single-family or multi-family home.
Okay, talk to us about foreclosures, because I know you've discussed this foreclosure overhang. When are we going to see it really flood the market, and then what are we talking about for housing prices?
Foreclosures is definitely the biggest hurdle to the housing recovery. There's an alarmingly large foreclosure pipeline. There's a lot of mortgages that are either seriously delinquent or in some stage of foreclosure that are likely to flood the market over the next...
But what's alarmingly large? Please describe that.
Sure. We estimate about 5.5 million mortgages are either seriously delinquent or in some stage of foreclosure. So that will enter the market as resales over the next several years. The question is, how quickly will that happen? If you see a big flood of those mortgages into the market, it could provide a big shock to the housing market and hurt home prices and curb housing starts. If it's a more gradual process, although we'll be prolonging the pain, it actually won't have as quite an adverse reaction on the housing market.
And so you place your bets on which kind then? What are we going to see?
I think that it's going to be a very drawn-out process. A lot of these mortgages are trying to get more modified. They're in the HAMP program. Unfortunately, HAMP has been disappointing. So they'll go into trial modification and then ultimately go into a foreclosure, but that takes time. So I would say the most likely outcome is that we will see an acceleration of foreclosures in the near term, and then they will just continue to enter the market for some time. Our mortgage strategists are looking for another 6 million foreclosures over the next 3 years.
Okay, so let's take that out of the equation then, if we could.
Okay.
If we take that out of the equation, where would housing prices be? Would we actually be accelerating or increasing by now?
If you take the distressed sales out of the equation, I think you definitely have a brighter outlook. The foreclosures is really what's driving down home prices in many parts of the nation. If you remove these really distressed homes from the market, you probably will have some more upside to home prices. But it's hard to do that, right, because they are a very important component. So overall, we think that the trend in home prices will basically be bouncing around the bottom for some time.